Welcome to the weekly update, where I'll go over the action in the market through Monday, April 3rd through Thursday, April 6th, and then we'll see how things look for the week of April 10th through the 14th. We did have a holiday-shortened trading week. The markets were closed on Friday in observance of Good Friday. We were pretty much unchanged. The Dow was up a little bit on the week. The S&P was down a little bit, but we're still maintaining more of a positive posture as the markets are really trying to figure out if they want to go higher from here. So let's go back and talk about the week session. Before I get going into the video, please note that from April 22nd through May 11th, I will be traveling. I intend to at least do the daily videos. I'm going to try to do the weekly video, the intermarket analysis video, and the deep dive video. There's some variables with me being able to take my equipment as well as the quality of the internet access that I may have while I'm gone. But I'll try to do the best job that I can with that. I have the daily videos, weekly videos, and intermarket analysis videos available as a podcast. It's just a copy of what you're watching right now. In each podcast, in addition to each video, I have a PDF of all the slides and charts that I use throughout the videos. I do have a private Facebook group. You're welcome to join that. Just send me an invitation. There's also a link for that in the description. Also, I have started posting polls on the community tab, as well as every day I update that section with the pivot points for that particular day, as well as the ones that last a month. So for the week, the Dow had a small gain, but the other major indices ended up having losses because we're having issues with growth concerns. That mainly has to do with earnings per share and earnings forecasts. Many of the economic reports that came out were weaker than expected. Volume remains below average. Whether we're going down or up, we're seeing below average volume. So on Monday, OPEC came out and announced that they're going to cut their production by 1.16 million barrels per day. That will begin in May and it will continue through the end of the year. This really caught the oil market off guard and shot oil prices up big time because there's less supply on the market. Then on Tuesday, the S&P was able to close right on top of 4,100. Also, bank stocks came under some added selling pressure, not necessarily surprising. Then Jamie Dimon, who's the CEO for JP Morgan Chase, in his annual shareholder letter that the regional banking crisis is not over yet and will have repercussions for many years to come. Then on Wednesday, the stock market was weaker, but then we closed off the worst levels. There was some late day strength that came back in. Then on Thursday, we opened weaker, but then closed near the best levels. We bounced up after having a down open, but it was on below average volume. Friday, the markets were closed because of Good Friday. So for the week, the Dow was down 0.1% on below average volume. The technicals are still looking a lot more positive. We had been getting some overbought indications on our weekly charts. We were also seeing those on the daily charts, especially on the weekly charts. Those have worked off quite a bit. So we're looking a little bit more positive because of this inflation and interest rate scenario. And then in the upcoming week, we will get the FOMC meeting minutes. We'll have to see if that has any influence on the market. Our trend is weakening. It's below the 20 and it's below the moving average, but the green line is on top. So it is positive. We're seeing that same thing on the daily charts. So that's a confirmation. The poll results, not very many people voted, but I just had 4 questions on there concerning the recent banking crisis. Do you think there's more to come? Everybody thought that. The other question in the bottom left, do you think the U.S. will enter a recession? 56% said yes in 2023, 22% no, there'll be a soft landing, where 22% said it'll be in 2024 or later. Over on the right-hand side, this is just what do you think the market will do? On April 17th, 2 weeks from now, do you think the S&P will be higher or lower? We had 57% saying that we'll be lower, 43% saying about the same. At the bottom, for the week that just ended, would we be higher, lower, or about the same? 17% said higher, 67% lower, about the same, 17%, and about the same ended up being the right answer for that one. John Murphy came out with a post on Friday that I wanted to allude to here. He has some text at the top. He's really noting some weakness in the sectors. He says sector performance has also started to narrow. It shows performance over the last 3 months. What he really sees in that is that tech and communication, they're doing really good, and discretionary has also been doing pretty good. And these large gains reflect a lot of rotation into that sector, and it explains why the NASDAQ has been doing quite well. Also, the big drop in bond yields has also given a lot of support to tech stocks. And then the last sentence says, but the fact that 8 out of 11 S&P 500 sectors lost ground is concerning. We can see on the top tech, communication, and discretionary. This is going back 3 months and how they've been doing the best, and all of the other sectors are showing some weakness, and that is a concern. Then looking at our analysis, here's the intraday chart going back to Monday, where we did start out pretty positive. We shot up, we hit some resistance and came back down, and then chopped sideways, but then we saw some late day strength coming into the market. That didn't really carry over into Tuesday. We were pretty flat where we headed lower, found some support, bounced back up, and then went sideways into the close. Wednesday was a little bit more weak where we actually went down. We built some support right about at this level, but then carried over with a little bit of strength going into the close. That was more positive, but we gapped lower on Thursday and it looked like, okay, here we go. But we set up a base just about at the weekly low before getting set to go higher and finishing close to the high for the week. Here's a look at how the indexes did. Now this just goes back the last 4 trading days. All of the indexes were down, with the Dow being down the least, where small caps and mid caps are really getting hit right now. They're showing a lot of weakness, and that's a concern and a warning sign that we're following. Year to date, we have the NASDAQ and the NASDAQ up the most, followed by the S&P. All of the other indexes continue to be positive, except for small caps are now down on the year. Then going back to the all-time high, all of the indexes are underwater, led by the NASDAQ 100 and the NASDAQ, but they're paring a lot of their losses. Looking at our sectors, this is just for the 4 trading days where we were down overall. So the industrial sector, discretionary, was down a little bit, but not by very much. The other areas were actually kind of strong. We had healthcare, utilities, communication, and energy that were up on the week. Here's a look at our relative rotation graph showing that XLK and XLC, that's tech and communication, they are the leading sectors right now and getting stronger. We do see discretionary, that's XLY, showing some improvement. But all of the other sectors are continuing to show some weakness. They're going from yellow over into red. Looking at the individual sectors for just the 4 trading days, we had utilities, healthcare, communications, staples, and real estate were up, when all of the other sectors ended up being down for the 4 trading days. Going back to the beginning of the year, just like we saw with the John Murphy post, communication, tech, and discretionary are doing the best, where you have healthcare, energy, and financials are down on the year so far. Going back to the all-time high, energy is still doing quite well, followed by utilities. We have staples pretty much unchanged, and then all of the rest of the sectors continue to be down. Looking at sentiment, we're tipping over into the greed category with a reading of 57. Here's the historical chart. After getting extreme negative, we've been bouncing up out of that. We did go a little bit higher and drop back, but now we're starting to go back up. The VIX is below 20, not only on the daily chart, but here on the weekly chart where it's declining with the line chart as well as on the bar chart. The right X bear bull ratio is getting back more to neutral. It spikes up when we're going down. It comes down when we're going up, so it goes opposite of the market. And then this is a newer chart showing the cash value against the tech sector. We measure cash by looking at the 1 to 3 month T-bill, and then we compare that on a ratio basis with the tech sector. When this really spikes up, that means there's a lot of fear in the market. People are getting out of tech. When this line is coming down and actually declining, that means the tech sector is doing well. So you have to think of that in the opposite way. In early 2022, we saw this black line really start to spike up. Well, now it's been coming down, and it's actually fallen below this Ichimoku cloud, suggesting that the tech sector is stronger. Now, this could always go back up, but for right now, things are showing a lot of improvement. Here's the latest reading of the active asset managers. We're getting a reading of 72.89. That's a little bit extreme. We really take notice when it gets above 80, but we've had some good movement in the market lately, so this is not surprising that this would go up. The latest reading of consumer sentiment came out with their final reading. It dropped down to 62. We see a real spread between the 2-year yield and how people are feeling about things, where they have a tendency in a good climate to go in the same general direction. And even though they're on different scales, they don't get all that far apart from each other. On the bottom, we can see the spread between the two, and this has gone on for quite a while. We also had the latest reading from individual investors. I plotted a thick red line on here to get a 50-period moving average to show us what is the general direction. We've been down around this lower extreme reading for quite some time, and that doesn't really help us all that much. I was hoping that this red line would give us a little bit more insight, and we're coming off of a really low reading overall and bouncing back up. Now, this could give some real good support to the market. This means that individual investors have been very pessimistic on the market, and typically they tend to follow what's already happened in the market. So when they start to go one way or the other, positive or negative, we tend to look at doing the opposite. The Ulster Index is also below the moving average and showing a lot of complacency in the market. Looking at the economy, here's the latest readings for the GDP Now. The green line is the Atlanta GDP Now forecast. This gray area is the range from forecasts going all the way up to a little bit over 2%, all the way down to a little bit under minus 1% for GDP. And this changes pretty much every day, depending on the way the wind blows with the economy. Here's another look at a graphical way. Here's the first quarter for 2023, showing that they think that we will be up so far. As long as we stay positive, that does not mean we will go into a recession. Here's the latest reading of the spread between risky loans and not as risky loans, starting to tick up slightly, but not giving us a real extreme reading. Also, we have the Financial Conditions Index, still below the black line, but it's starting to go back up. If we cross back above that, that means that we're having some difficulties with the economy. And here's the tightening standards, which again has not been updated since the first part of February. It's only updated every quarter. So we have to look at other charts that measure this information more timely to get good insight into that. But this basically just means that banks are getting a lot more strict with who they're loaning money out to. We also look at the real-time SOM rule recession indicator. It was updated on April 7th. We're still below this black line. We get really nervous about things when we cross above this red line, and we're not even close to that now. And then the smooth recession probabilities, again, when we get above the red line, we're concerned. We're just a little bit above the black line. The Bray-Butters-Kelly Index, we're still below the black line, but we are going up. If we cross above this black line, then we would get more concerned. Then looking at the liabilities and capital of the Fed, they had been going along making a lot of money, and then all this banking crisis came up, and boom, we're just seeing a real decrease in their overall liabilities when compared to capital. Inflation, we did start over again with the inflation nowcasting. This is based every quarter. It's pretty much flat overall for CPI as well as PCE. We are going to get the CPI coming out in the upcoming week as well as the PPI, so we'll get a read on inflation. The Fed balance sheet, after coming down through quantitative tapering, really spiked up because of the banking crisis, but now it's been coming back down slightly. Here's another look showing that they're starting to take money off of their balance sheet. So they're trying to resume more of a quantitative tapering stance. Looking at breadth, we're still positive based on price and volume. We're above the moving average based on price. We're trying to come back up, and we're seeing a little bit of a negative divergence based on volume, just because volume has really been tapering off. Our advanced decline ratio, we're above zero but going sideways, but we're still positive. The new highs, new lows, we're showing a real improvement with the 4-week moving average. We're also seeing an improvement above zero with the 10-week moving average. Accumulation distribution, we're above an advancing moving average. That's positive. Looking at our trend, the ADX is below 20. We're below the moving average, so we're not in a trending environment. The green line is just barely on top, so we default to positive. Our Arun also is more positive. The oscillator is above zero, even though it is flat. The green line is on top. That means buyers are in control, even though they're decreasing, but so is selling. That's the red line. The mass index is not generating a signal currently. Looking at our 2-year daily chart, we're coming right up to the underside of this upward sloping trend line. Can we break through above that? We did hit some overhead resistance. If we start to come back down, we'll be watching these other pivot levels, but we remain above the 50-period moving average and the 200-period moving average, which may provide support if we start to see prices fall. The trend channel shows that we're getting back to the upper side of the midpoint of the trend channel going back to 2009. The pivot points were just barely above the pivot point, so we're leaning back more positive. We're above the 50-period simple moving average on the weekly chart, so that is positive. The long-term trend, we're just crossing over and getting a golden cross. We saw this already on the daily charts quite a while back. We are starting to turn more positive on the weekly chart, so that is confirming the positive stance. The BPI is above 50 and advancing, so that's positive. The Chaikin oscillator is also above the dashed line and going up. That is positive. The Chaikin money flow is going sideways a little bit, declining, but we're still positive overall. And this attempts to measure institutional buying and selling. The Force Index continues to be positive. The McClellan oscillator, after going extreme positive, has come back down, but we're still positive overall. The summation index based on price is now crossed above zero as well as volume, so this is positive. Looking at our different oscillators, the slope is trying to turn back up, as is the TSI, so these are positive more in the short term. The MACD is positive, the PMO is positive, as well as the PPO, and we remain positive with the TRIX and the KST. So pretty much across the board, longer term, our oscillators are still positive. Swell trading oscillator, after getting extreme positive based on price, has fallen down, but it's still positive. We never got really extreme based on volume, but we're still above zero as well. The PMO, we looked at that a minute ago. It is positive. We're crossing above zero based on price as well as volume, so that is positive. The PMOs that are rising after being extreme positive have now fallen back down. We also saw this same reading on the daily chart. The buy signals are still positive and just getting ready to go into extreme positive territory. The percent of PMOs that are above zero is advancing. So this chart overall is positive. The RSI is above 50, even though it declined over the past week. But when it's above 50, that is positive. The special K coming down to this moving average. This could be longer term negative, but it hasn't crossed the moving average yet. The Stochh RSI is extreme positive, ticked down just a little bit, but that could also show good momentum. But if you look on the bottom, you can see where volume has really dropped off. The Williams percent R never got to extreme positive territory, ticked down a little bit, but is still positive overall. The Vortex has the green line on top, that's positive. The Ultimate Oscillator crossed above 50 and is positive. The money flow ticked down just a little bit and is still below 50. That is negative. The percent B indicator is above the dashed line, even though it did decline, but it's still positive overall. The rate of change, we were virtually unchanged on the week. We're going back 50 periods. We are showing some improvement. We are working off of a buy signal on the daily charts, and now we're starting to get a buy signal on the weekly charts. We're still holding up with longer term support on our weekly chart. We're above the 10-period moving average as well as the 40, and we're well above any of these fib retracement levels, and we're still comfortably above the 200-week moving average. Looking at our different charts, we're positive with the Heikin Ashi with open bars. The Kegi is positive and pointing up. That is positive. The Renko is positive with open blocks. Equi volume, not much of a change one week to the next since we were not down very much, but we're showing some improvement going back 14 weeks. The point and figure chart didn't have any new additions. The 3-line break is positive with open bars. Looking at the Elder Impulse system, we remain positive on the weekly chart for the S&P. This is a new one, and this could be kind of big. We did see a dot drawn underneath with the parabolic SAR. It had been negative, and now it's switched over to positive. Looking at the broad market, we have the S&P pretty much chopping sideways right now, as are the mid-caps, but we're seeing a little bit more weakness somewhat in the mid-caps, but we're really seeing that now in the small caps. And in a good, healthy, strong environment, we want the small caps and mid-caps to perform very well. All stocks continue to be positive. The mid-caps are still positive, but just showing some recent weakness. And here's the small caps. We want to see them really turn around and get some fire underneath them. The Dow is still in an overall uptrend, even though it's been chopping more or less sideways. The NASDAQ is just giving us a recent golden cross on the weekly chart. We're also working off of a recent golden cross on the daily chart. And the same thing is true with the NASDAQ 100. The Wilshire just starting to give us a golden cross. The NYSE did give us a golden cross weakness and is now starting to come back up. The FANG stocks working off of a recent golden cross. ARC still in an overall downtrend, but might be getting ready for a golden cross here if we give it enough time. Looking at the biggest software companies, also a recent golden cross. The banks really have been suffering. They really fell down. The MACD continues to decline, and we're extreme negative with the RSI. Looking at Dow theory, been going sideways with the Dow. A little bit more weakness with the transports. And utilities did see some strength over this past week. Some broad market looks. We have the CRB, which is still in an overall downtrend, but did have an up week. Copper starting to chop more or less sideways and is still in an overall uptrend. Gold has been kind of getting some headlines lately as it's breaking above 2,000 on the futures chart. This is the gold ETF, which still is showing a nice advance, but it's not quite breaking out yet. Silver is also in an overall uptrend and has been going higher. Oil, this was the surprise that came out from OPEC. It really shot oil prices up as they had been going lower. The dollar is still in an overall downtrend. Looking at bonds, some of this is abbreviated because of the shortened week. The bond ETF still is in an overall uptrend and giving a recent golden cross. Yields continue to come down overall, but shot up a little bit on Friday. Here's the MOVE index showing that volatility in the bond market is decreasing slightly after being quite high. Here's a weekly chart of the US, UK, and Germany showing how rates are coming down overall. We're also keeping an eye on Japan. That's the red line. They have their own little scenario. Some relative studies. Here's the intermarket analysis chart. We still have oil in the lead. Gold is now taken over the dollar. We're still negative with the S&P as well as bonds, even though they're showing some improvement. The bond to S&P ratio is ticking back up ever so slightly, but we're not really seeing much of a breakout with this chart. Here's the stock to bond monthly chart, where stocks are still in an overall uptrend, but have since been pulling back to this moving average. And the gold to dollar ratio, the dollar's been going down, gold has been going up, so this ratio is doing better. And also gold is doing well compared to the S&P 500. Low volatility ratio is still in an overall uptrend, but showing some weakness. And growth to value, growth is really trying to repair things and show some improvement, but it's still in an overall downtrend. The NASDAQ 100 to the S&P, the NASDAQ 100 has been doing well, and we're getting a recent golden cross with this ratio. The S&P 100 is still in an overall downtrend compared to the S&P 500, but it's showing a lot of improvement. If we can stay above both of these lines, we will see a golden cross. Discretionary is still in an overall downtrend compared to staples, but showing some improvement. And energy, which was really strong in 2022, is now showing some weakness, and we're just getting ready to see a death cross when compared to the tech sector. Looking at some of our longer-term trends, the low that was set back in October 2022, we measure this with the NYSE breadth thrust, and we have a 100% track record going forward, but it means it could be really scary along the way. But the longer you look out, this is a really good sign to work off of for very long-term investors. It ticked back up just slightly over this past week after showing some weakness. Momentum studies, we're going back and comparing other times when we had a breakout above the downward sloping trend line and when those failed. We have two of those on this chart from 1998 to 2004. We broke out here in late 2000. We broke out again in 2001, only to fail after that. We look down at the bottom and we see, well, the MACD was improving, but it wasn't above zero both times. And so that led us to believe that breakout ended up being a fake out. We can also look from a period from 2007 to 2010, looked like we were breaking out only to fail. The MACD was chopping sideways at that time. So we compare it to right now because we are above this downward sloping trend line. The MACD is still hanging in there. It's above the moving average and it's above zero. So this so far indicates that this breakout is for real. So what's our outlook for the upcoming week? On Monday, we have wholesale inventories coming out. Then on Tuesday is the NFIB small business optimism. Wednesday is going to be a big day with CPI as well as the FOMC minutes. Thursday, we'll get PPI. Friday, we'll get retail sales as well as the preliminary reading for consumer sentiment. So the technicals, you can see, are more positive overall. And we're seeing that also on the daily chart. We were very overextended on a short and even intermediate term basis on the daily charts. We fell back for a few days, worked some of that off. There's still some of that left, but we didn't really do any technical damage. And we're also seeing a lot of improvement now in the weekly charts. Folks are still really fixated on the inflation and interest rate scenario, and it's going to be that for the foreseeable future. I feel like a broken record when I say that, but we're also worried about this banking situation. Is there more news to come? Are there going to be other things that end up hitting the markets and really taking things to a more negative place? We will have one speech on Friday given by Governor Waller that'll come just before the market opens. Then looking at the Stock Traders Almanac statistics for April, it tends to be the best month for the Dow going back to 1950. The Dow's been up for 16 straight years. Unfortunately, 2022 was not one of those years. The Dow is stronger after tax day. The earnings expectations, because we're getting ready to come into earnings seasons now, that tends to be optimistic, where they buy the rumor thinking that the earnings report is going to come out, and then it comes out and it might break all estimates. But then you see a sell-off right after that. That tends to happen in April. Doesn't mean it's going to happen this time, but that is historically what has happened. April also ends up being rarely dangerous, but there are 4 exceptions. Unfortunately, the most recent one was in 2022. Then Stock Traders Almanac has their own system that they do things, where they look at the best 6 months. Well, it ends when April ends. Then with the S&P going back to 1950, during pre-election years, the return is 3.5%. During options expiration, which is still a ways out, we're up and down on that first day about 50-50. On expiration day itself, that Friday, we're up 63 and down 37%. For the whole week, we're up 70% and down 30%. The week after, we're up 63% and down 37% of the time. Then looking at things for Monday, April 10th, it's pretty negative overall with the Dow, S&P, and NASDAQ leaning more towards the negative side. The Dow is up only 42.9% of the time, with the S&P being up 38.1%, and the NASDAQ is even worse. It's only up 28.6% of the time. But for the month, we tend to be positive. We're up 71% of the time and down 28% of the time. Then the yearly statistics, and this goes all the way back to the beginning of the year where we had the Santa Claus rally. That gave us a score of 1. Then we had the first 5 trading days of 2023. That was positive, so that gave us a score of 2. We ended January positive, so that gave us a score of 3. That tends to be very positive for the market. And the market also likes that we're split between Republican and Democrat throughout the different parts of Congress. Here's a chart showing the pre-election year in green. Historically, have had positive seasonality. Here's another chart showing the gray line, which is also positive for right now. And we're also coming into that gray line here that is also positive. And then looking at the day for Monday, that'll be the 6th trading day. Now, it's really the 5th because we weren't open on Friday. But the bond market was, so that counted as a trading day. On a pre-election basis, the green line, we do tend to be up. But historically, we have been down on that day. Our scenarios for Monday can't really go with the down one because things are pointing up, but we're not trending. We're still short-term overbought to a degree on the daily charts. Hard to go with the up one because we're overbought and because we're not trending. So on the daily charts, we're still going with the sideways trend. The ADX is crossing above its moving average. We're on the weekly chart. It's still below. Both charts are showing that we're below 20, and both charts are showing that we are positive. Thank you. I hope you found this helpful. I will be posting the intermarket analysis video as well as the deep dive video. You'll notice that I didn't have any Isabel net charts and some other postings that I usually go through in this video because of the holiday. Those things are not ready when I was ready to record, so I will try to interject those into future videos. I want to wish everybody a very happy Easter and a great weekend, and I will talk to you in the next video.